Welcome to Finance Deep Dive. Let's get right into it and break down why oil basically has this incredible grip on the entire world's economy in this quick video. You hear it called the lifeblood of the global economy all the time. And you know what? That's not an exaggeration. It's woven into the very fabric of our daily lives almost everywhere you look. I mean, the most obvious connection is, of course, transport. Cars, trucks, planes, ships. Pretty much everything that moves us and our stuff around the planet runs on it. And that reliance on transport, well, it connects oil directly to our food. From the fuel for the tractors to the trucks bringing groceries to the store, it's all connected. Then you've got manufacturing, and this is way more than just powering the factories. Oil is a key ingredient for plastics, fertilizers, countless things we use every single day. And in so many parts of the world, it's still a huge source for generating our electricity. So yeah, when the price of oil moves, the effects are felt absolutely everywhere. Okay, so what actually happens when the price jumps? Let's trace the ripple effect of a sudden price spike. So let's imagine the price of a barrel of oil is sitting at a pretty stable $60. And then, boom, suddenly it shoots all the way up to $100. What happens next? Well, the first and most immediate shockwave hits transportation costs. Right away, it just got a lot more expensive to move anything anywhere. For airlines and trucking companies, fuel is one of their absolute biggest expenses. So they can't just absorb that kind of hike. It has to be passed on. And that passing on of costs, well, that's what kicks off the second ripple, the one we all feel, inflation. Because it costs more to ship everything. The prices of groceries, electronics, you name it, they all start to climb. Your money just doesn't go as far. Now, when prices start rising that fast across the board, that gets the attention of the central banks. And their go-to move to fight inflation is to raise interest rates. The goal is to make borrowing money more expensive, which kind of cools down spending in the economy. But here's the catch. That's a really delicate balancing act. Higher rates might tame inflation, but they also pump the brakes on the entire economy, sometimes slowing down growth. So if you zoom out, what started as a simple oil price change has now set off this massive shockwave that ripples across the entire globe. And it really creates a story of winners and losers. Oil exporting nations, they see their profits just skyrocket. But the big oil importers, like Japan or countries in Europe, they face soaring costs that really strain their economies. And this isn't just theory, right? History is just packed with examples of how these oil shocks have sparked major global crises. I mean, think about the oil crisis back in the 1970s, or how record-high oil prices played a big part in the pressures leading up to the 2008 global recession. And even more recently, that inflation surge we all felt in 2022, a huge driver of that was the shock to energy prices. So the crucial point is this. Oil prices don't just change what you pay for gas. They send ripples through every single layer of the global economy, influencing everything from inflation to trade and even global politics. Understanding this is so key to understanding how our world works. Hey, if you like this content, don't forget to subscribe. It really motivates us to keep posting.